Amid lingering uncertainty around the inflation outlook, the latest strengthening of the US dollar is devaluing other currencies. This particularly for emerging market currencies, with the South Korean won weakening, the second most among them this month after the Russian ruble. Our Shin Ha-young has more.
The South Korean currency continues to lose ground against the US dollar as fears of inflation rise in the United States. According to data filed by Bloomberg, as of Monday morning Korean local time, the South Korean won has weakened against the US dollar so far this month by 6.32%. Among 23 emerging markets, this is the second largest decline next to the Russian ruble. The main reason for the strong greenback is last month's Personal Consumption Expenditure, or PCE, which rose by 4.7% compared to the same period last year, exceeding market expectations and signaling that inflation in the U.S. is accelerating again. One expert also says the Bank of Korea's recent decision not to raise interest rates again put more pressure on Korean won to depreciate.
Because the labor statistics in the United States came out very strongly, and because the PCE inflation rate for January was higher than expected, there is now speculation that perhaps the Fed will raise the interest rates more than was expected. And that is pressuring dollar to become stronger. And for Korea, especially because Korea froze its interest rates during the last monetary policy meeting, and Korea will not be able to raise the rates until the next policy meeting, which is in April.
He forecasts that as long as the Fed raises rates and the rate gap between South Korea and the U.S. remains large, there will be pressure on the Korean won to depreciate. Meanwhile, on Monday, the won closed at 1,323 against the greenback, the exchange rate rising by 18.21. This is the first time it's closed at over 1320 since December 7th last year. Shin Ha-young, Arirang News.